Market suffering big losses yesterday, as you know. All the major averages in bear market territory at this point. The Dow is now 28.3% down from its all-time highs. Joining us right now to try and make sense of the market volatility is Peter Boockvar. He's Chief Investment Officer at Bleakley Advisory Group. He's also a CNBC contributor. And Peter, what do you think?
Well, we don't know what earnings are going to be. We don't know what multiple to put on that. So everyone is basically flying blind here. I do want to say that I am a believer that we should be shutting things down to flatten that curve and get this over with as quickly as possible to buy us time, hopefully 5-6 weeks where we can get to May. We can give the healthcare system some time, and we can bring in millions of test kits, and hopefully that will calm people down.
What are you doing at this point? Because if we don't know where the earnings are going to be, we don't know what the economic impact is. To Andrew's point, if you're looking back at September of 2018, is that where you think we'll be 12 months from now?
Well, the first thing with clients we try to focus on is having a couple of years of liquidity regardless of what markets do. And we're not afraid of markets that decline because you're able to buy things cheaper. I mean, I tend to focus more on value. Yeah. So the cheaper things get, the more attractive they are. So we use client money to take advantage of this. Now, I can't discount the possibility that we go lower, that this recession deepens, or who knows. But having the ability to buy things on sale, I think, is attractive to most of our clients.
Sure. If you're looking at things 28, 29% cheaper than they were just 3 or 4 weeks ago, have you actually been putting money to work? You like these opportunities, but you have been over the last several days?
Yes, but slowly, because you still need dry powder if this does get worse. But when things get marked down 10, 20% in a matter of days, if dividend yields are pretty attractive, you do have to close your eyes and assume that 6, 12, 24 months from now, we will get past this.
Can you talk about sectors or individual stocks that you've been buying?
Well, I would say the most on sale are the travel-related stocks. I mean,
yeah, but that's the one that they're most on sale for a reason.
Exactly. But the global desire to travel, to me, is an unstoppable force that is only temporarily being impacted here. I think emerging Asia is very attractive. I think even the beaten-down big-cap energy names that pay big, fat dividends are attractive as well. But the point is that don't be... Yes, it's easy to get afraid by this, but things that are cheaper are certainly more attractive and provide the basis for better future returns in the next couple of years.
Peter, does that mean you don't have concerns about any of these operations running out of business or running out of money, running out of operating money? You have to start to get to the point where on some of these issues that are most heavily discounted, that's what's driving some of those issues. The question about whether they're going to be a going concern or if they're going to have to find extreme measures to come up with cash.
No, that is my biggest concern. I mean, the bubble in this cycle has been on corporate balance sheets. So balance sheet analysis is the most important thing right now to see which companies are going to survive, which are going to barely make it through, and which ones are not.
Fair for me to say that you sound relatively optimistic?
I'm optimistic. I think we just need to get through the next 6 weeks.
Okay.
I don't know what kind of damage is going to be done over the next 6 weeks. We just got to get through the next 6 weeks any which way.